program. Hi, my name is Steve Bunce. I am the Executive Director of Southern SOG, and I want to welcome you to this webinar. I just wanted to show my smiling face, as well as Julia Sampson, who is also in the background. And we will be with you today trying to keep everything running smoothly. And just welcome to the webinar, and we hope you enjoy it. Thank you very much. So today's webinar is titled Schedule F versus Profitability Accounting for Vegetable Farming. Most farmers are very familiar with the IRS Schedule F and do their best to keep track of the information required to complete this schedule. Unfortunately, the information Uncle Sam needs to keep the government going and the information farmers need to keep their farms going is not always the same. Imagine that. Today's webinar will explore this reality more closely and suggest ways that you can assist farmers in addressing it as well. Before we begin, I'd like to give you a little background about Southern SOG. The organization began in 1991 in Newmarket, Tennessee, with a group of farmers and farm advocates seeking to raise the voice of Southern agriculture to the national level. Since those early days, Southern SOG has a rich history of partnering with hundreds of organizations and thousands of individuals in 13 states across the South. The mission of Southern SOG is to empower and inspire farmers, individuals, and communities to create an agricultural system that is ecologically sound, economically viable, socially just, and humane. Because sustainable solutions depend on the involvement of the entire community, Southern SOG is committed to including all persons of the South without bias. We work in three primary program areas: sustainable and successful family farms, community food systems, and bringing the Southern voice to the farm policy dialogue. Southern SOG is probably best known for our annual conference. This coming January, we will host our 25th anniversary conference in Lexington, Kentucky. All of our conferences are renowned for the outstanding practical information provided and networking opportunities. But this year will be extra special as we will commemorate and celebrate 25 years of accomplishments in the sustainable and local foods movement. It's not only going to be a great opportunity for learning, sharing, and inspiration, but for fun and celebration as well. Please join us in Lexington next January 27th through the 30th. Now a word about the Growing Farm Profits Program. Southern SOG and our partners developed the Growing Farm Profits Program in 2011 in an effort to help farmers get to the heart of profitability on their diversified vegetable farms. To date, over 400 farmers, future farmers, and farm service providers have participated in the trainings. Feedback from across the spectrum of participants over time has indeed shown a positive impact on farm profitability. To date, all Growing Farm Profits trainings that Southern SOG has hosted have been full-day or longer courses, covering a broad spectrum of issues in managing for profitability. The webinar series we're offering this fall has been developed to allow us to reach a larger audience of busy farm service providers, touching on some of the recurring themes our training team has run across in the longer trainings. It's our hope that some of you who participate in the webinar, as shown here, will want to dive a little deeper and join us for the Growing Farm Profits in-service training that we'll be hosting in Lexington, Kentucky on January 26th, right before our conference. If you missed one of the first two webinars and you'd like to review them, they are now available on our website as Vimeo presentations. Our presenter today is Jim Munch. Jim is the owner and operator of Deer Run Farm, a certified organic cow-to-finish grass-fed beef operation. He also has a consultancy aimed at helping farmers attain skills to achieve sustainable profit through improved general management and by using data to make strategic and operating decisions. Jim developed the Veggie Compass vegetable costing tool, and he has participated in numerous GFP trainings hosted by Southern SOG.
Are we supposed to go? No, no.
Excuse me.
Good afternoon. My name is Julia Sampson, and I work for Southern SOG. Before we get started, I'd like to provide you with just a few pointers on some of the webinar logistics. We've got many participants in the webinar today. Therefore, all the lines have been muted. The webinar is being recorded, so we'll share a link to the recording soon after the webinar via email, just in case you want to watch it again or share it with your colleagues. Let's see if I can get to show you a little screenshot of the control panel here. Great, thanks. Let's get the slide to advance. Right here is a picture of the control panel here. You'll see the grab tab right here, that orange tab, that you can expand or contract the control panel. You're free to ask questions here and submit your questions via the question box located on your screen as shown here. We'll be addressing all your questions at the end of the presentation. In order to help us know a little bit more about the audience today and the current level of understanding of our topic, we've got a quick pre-webinar survey for you that consists of 3 questions. Each question is going to pop up right on your screen as I launch the poll. We'll give you about 15 or 20 seconds to respond to each question and then show the results to the group. So let's get ready for the polls here. And like I say, these are really quick polls and really quick questions. So question number 1 there. Do you currently or will you in the future assist diversified vegetable growers with their farming operations? And this is a simple yes or no. Oh, I see all of the answers coming in, and 63% have voted here. Okay, 75% of the votes are in. And we'd love to leave it open till all your votes are cast, but it's just a simple yes or no question. So I'm getting ready to close the poll shortly, and we'll see the results on the screen here. So I'm going to close the poll, and I'll share those results with you on the screen. Okay, that's the results of question number 1. Now we're going to go to question number 2. Launch that poll. What's your confidence level in assisting vegetable growers with accounting for tax purposes versus accounting for farm profitability? Now, they're just simple, quick 4 responses here. We look forward to receiving those responses. They're very helpful with us as we manage for future trainings in this area. So we've got a whole bunch of responses here. I'm going to close the poll. 5, 4, 3, 2, 1. I'm going to close the poll, and then I'm going to share the results with you on the screen. So you should be able to see the results to poll number 2. Okay, here's the final answer, the final question here. I'm going to go ahead and launch that poll. What's your confidence level in identifying useful tools to help vegetable farmers with accounting for profitability management? So we're just asking for a real quick answer here. You don't have to think about it a long time. And we've got a lot of votes coming in. I can see you all voting away. You'll be richly rewarded when you answer these polls. It helps us greatly in the future. So we've got a lot of answers here. I'm going to close the poll and show you share those results of this question with you on the screen. Okay, thank you so much for participation in this short survey. I'll pass the presentation to Jim Munch. We appreciate your cooperation.
Why did it switch? No, that's right. Okay. Well, good afternoon. We don't want to rub your nose in it, but we are holding Schedule F up, sometimes with derogatory terms, but really don't mean that so much. Schedule F is how farmers report the profitability for the year that they just closed. It's how they report to IRS. It's an important document. The point we're trying to make is that that document forms one starting point, only one starting point, to have useful data that a farmer can use to really manage for profit. And what we'd like to do over time is take that one document, use what we can out of it, but then enhance over time the data that a farmer has and how to use that data to impact profit. We're going to do this through the vehicle of a video, and this is kind of uncharted water, certainly for me and for many of my colleagues. And so the transitions from these PowerPoint slides to that video may be a little, as we've said, clunky. Bear with us. We think that there's value in showing the video. The video shows how a service provider might interact with a farmer if the farmer calls and says, "Come and help me, I'm not making enough money." This one, okay. So who are these producers? These are multi-crop producers, vegetable producers. They typically are growing 40 to 60 different crops in small plots on fairly small pieces of land. They're selling their produce through a multiple of channels. They can sell directly to consumers. That's farmers markets, that's roadside stands, that's CSA boxes. They can sell to restaurants, retail stores directly, wholesalers, consolidators, food hubs. They can sell through many channels, and most of them do sell through multiple channels. They do have the ability to set prices in each of those channels, and quite frequently, and in fact we encourage this, there are different prices within each of the channel to channel. These farms typically have high labor cost content. They typically have a fairly high investment in facilities and equipment, and in fact it's usually equal to or up to twice the investment that they have in land. Like many other farms, the accounting systems that you find on these farms are set up for tax preparation and not for management. So if we go back to what this Schedule F looks like, this is, as you walk onto a farm, this is probably the only thing you're going to find. And so what do you do with it year one? Well, you look down at the expenses that they have and try to take those expenses and put them into buckets that can be analyzed for business purposes. And so the basic method is something like this. We're going to restate the financial results from the Schedule F or from any other standard accounting system that they may have that is aimed at showing profitability. Then we're going to compare those results to their goals, which may be formed by having them look at other farms through a benchmarking system. And any of you who have been in extension understand, for that matter, any FSA officer understands the concept of benchmarking. Then revisit the goals to make sure that they are based in reality with the farmer. Discuss management changes to move the results toward a better result. Suggest improvements in data keeping so that the next year when they sit down and have this exercise, there's more to get their hands around. And then set a follow-up system. I got a little out of line. Now we're going to go to this webinar. Bear with us on the quality of this thing. I think it'll be very instructive for you.
Jim and John, it seems as though our participants aren't hearing any audio. Several have responded in the question box.
Looks like Schedule F, the accountant has made for you. It's driven by they're wanting to make sure that you've got the right income tax documents.
Okay.
But they're hard to manage. So what I'm going to do is take the accounts as they are right here, and we're going to divide out all the expenses into three categories. One category is going to be production costs, which are more or less variable with volume. Another category is going to be the cost of selling at the market, in web pages and so forth, which are sort of fixed and sort of variable. And then there's some expenses that even if you didn't grow one turnip, you'd still have those expenses. And so
you mean overhead?
Overhead, exactly. And they're fixed. So we're going to make columns, and this one is going to be called production cost, and this one is going to be called sales and marketing, and this one's going to be called, we'll use your word, I like it, overhead. And we're going to take each of these expenses and work down through, and you can tell me where you think each of these belong. Some are obvious. For instance, you've got fertilizer and lime.
Okay, that's production.
Production. So we'll just take the number across and put it in the production column. Another obvious one would be seeds and plants.
It's down here.
Down here, and that one we're going to put right straight across. Make sense?
Yep.
But now there's some that are a little more difficult. For instance, gas, fuel, and oil. Where do you think
that's production?
Well, how about going to market?
Oh, sure, right.
So some of this, and now I'm going to force you to make some decisions about how much of that might be in the production area, how much of it might be in sales and marketing, but overhead too. Go into the hardware to get some bolts or supplies or something like that. So we need to divide that into a piece into each of the three columns.
Okay. I guess I would say it's probably, I guess as a rough guess, fine, or do I need to?
A rough guess is good enough for what we're doing right now.
Okay. I guess off the top of my head, I'd say probably a third in each of those categories.
So that works out pretty good. So now we're going to go through the rest of these sort of with a similar methodology, and if we have to guess, it's better than nothing.
Okay.
Okay, now we go back to a slide. So we picked up that some of you are having trouble either hearing or with the video, and we're trying to get it all fixed. But we're going to forge ahead. For the most part, I think people can hear it, and I guess that's half of the battle. But anyway, what we've done with Anthony, this farmer, is taken what he had, and what he had was a set of QuickBooks accounts that were put in place to support his Schedule F. Therefore, they were in sort of the same format as the Schedule F. Again, there's more texture here, but there isn't enough texture to really get down and manage with this. So we've asked him to go through this exercise of taking each of these account buckets or each account numbers and putting them into three buckets, which we described. The bucket of the production, which will become the cost of production, the bucket of selling and marketing, which will become just that, selling and marketing, which will treat more or less like a general expense, an overhead expense, if you will. And then finally, true overhead items, things that you spend whether you sell anything or not. So now we're going to go back to this troublesome video. I hope it works better this time around.
So Anthony, what we've done here is we've added up all the numbers that you ascribe to production, sales and marketing, and overhead, and we've got totals.
Okay.
But there is one thing missing, and that is that there's no accounting for the time that you've spent on the farm. So I know this is going to be tough, but I want to ask you about how much do you think you've personally have earned out of work on the farm, and how have you spent your time?
Well, I guess out of the total there of 17.5, call it maybe $10,000.
Okay.
Went to me. So, well, if you calculated my hours, it wouldn't be very much in terms of an hourly wage. I can tell you that.
And how is it divided between production, sales, and then just general and administrative overhead?
Most of the time it feels like 100% is out in the field, but obviously spend other time as well. I guess we could say 60% in production.
Okay. That's pretty easy math for me. I've got it. And sales and marketing?
And overhead, I guess maybe even each, so 20 and 20.
20 and 20, okay. I can do most of this in my head. 47.6, 5,600, 10,000, 100. Now let me tell you why I wanted you to put this in. A lot of the benchmarking data that we've been able to get from various sources usually has the owner's salary or some kind of compensation for the owner in it. So to compare your farm with those farms, we really need to put it in here. Okay. So now we've got it. So there are the totals.
All right. Well, I guess I'm interested, but I don't quite understand how this helps me yet.
Okay. And that's the good question, because that's where we need to go next. And what I'd like to do is I have a format that begins to put this in a form where we can make these comparisons that I'm talking about. And so the form is simply a very high-level profit and loss statement of your farm. So we just take numbers that we've generated here, and we start out putting in your sales number, which was 70,000.
Right.
And then from the work we just did, let's put in cost of production, 47,600, and we're going to take the cost of production away from the sales number to arrive at a number which we'll call gross profit. And so that's 70,000 minus 47,600.
22,400.
Okay. And then we have sales and marketing of 5,600, and we have overhead of 10,100. And so what we need to do is take both of those expenses away from the gross profit.
Okay,
So it's 22,400 minus 5,600 and minus 10,100.
6,700.
6,700. Okay. Now what we're going to do is take all of these numbers as a percentage of sales. So the cost of production was 47,600, and divided by 70,000,
I see,
which is your sales number.
So that's a percent. That's 68%.
68%. Okay, and so 68% away from the 100% of sales means that you had a gross profit rate of 32%.
Okay.
Now, sales and marketing as a percentage of sales, $5,600 divided by 70,000.
8%.
Okay. And general and administrative, 10,100 divided by 70,000.
14%.
Okay. And so profit was, net profit after all those expenses was $6,700 divided by 70,000.
9.5%, 10, somewhere.
And that makes sense because you had 32% gross margin, minus 8% sales, minus 14% general and administrative, and so it's about 10%.
Okay.
Okay. Now what we're going to do is put in some numbers of average farms that we've collected data from in exactly the same format and see how the comparison goes. Okay, now we're going to do
So what we've done is we've taken a printout of Anthony's QuickBooks summary of his profit and loss, and just slid across right in front of him, had him participate in, and divided all of those into production, sales and marketing, and overhead. Excellent. Okay. Now, when we do this, we got to start paying attention to some of the words that are used. A lot of times an accountant will say something like total income because that's the words that the IRS uses for the sales line of a typical profit and loss statement. I like to start using the word sales because, in fact, the number is derived from how many sales are made. Schedule F takes into account income sources that are not strictly sales, like government payments, like co-op payments, and so forth. And so I'll let the IRS off the hook in using the word income. But for these purposes, and to start getting the mental process right in the farmer's head, I like to use the word sales. Cost of production is the cost to produce everything that was sold. If it were a retail operation only, the words typically used in the accounting row would be cost of goods sold. And in fact, if you stop and think about the words cost of goods sold, that can be the cost of something you buy for resale or the cost of something that you produce. So I like to use the words cost of production for anything that is produced on the farm. Sales and administrative is something that isn't even mentioned on the IRS Schedule F, nor will it be shown in many of the mock-ups of QuickBooks. Administrative, the same way. And then remember that we did allocate the cost of the operator. And if you would come to the training that we'll have in January, we'll get into this in excruciating depth about how you could make some estimates of that. But for the purposes of this webinar, we're going to just go with Anthony's guesstimate. It's better than anything. And it's certainly, if you went out on the farm and asked him that, that's how you would do it as well. So what we'll do is we'll take this scribbly piece of paper and we'll do the math that you saw us go through very, very slowly in the video. And this is what the top view looks like. And so now on one very concise table, we can show the farmer the sales, what it cost him to produce the goods that were sold, the gross margin or the residual sales minus cost of sales or cost of production, what his sales and marketing expense was as a percentage of sales, his administration expense, etc., and then show it against some goals In this case, we simply used some benchmarking that was done by the Wallace Foundation and Farm Credit, and we'll give you the links to those at the end of the talk here. And so now we can have a conversation with the farmer about why he is in variation from those. Okay. I've put down some benchmark numbers that correspond to the way that we've reconfigured your numbers.
Okay.
Now, before we get into it, I have to tell you that in the world of vegetable production, the distance from the top to the bottom is quite broad. And the number of benchmarked farms that we have in vegetables is rather small compared, let's say, to corn production or soybean production. We have hundreds of farms reporting. So we have to take it a little bit with a grain of salt. But there are some trends that pop out here. One is that the way we've calculated it, your gross profit level is 32%, but on these farms that we've looked at, that's more like 42%. And so there's a margin difference.
Okay.
And margin is composed of two things. One is the price that you sell at, and the other is the cost that you have in production. And so we should look at each of those and with the data that you have. So let's start with a sales number. You said that you're selling at CSA. You have a CSA.
Correct. Yeah, we have 90.
About 90 members. And the market for CSA will dictate how much you can charge. But you have to be careful that you're comparing the same number of boxes delivered over the same number of period with roughly the same variety of vegetables in them.
Okay.
Have you done that work, let's say, on the internet or wherever you can find that information?
Yeah. There's about a dozen other farms that offer a CSA program in the metro area where we are marketing. Mm-hmm. And and many of them have been around for a number of years. So when we started our farm, we felt like we needed to set our price a little bit lower so that we could attract members. So
of course now, Anthony, you've been in business for 5 years, and so it may be time to try to push that price up over, not immediately, but over the next couple, 3 years. Maybe try to have an increase of 5-10%. When you go out next year, and then another time.
We have been thinking about that. We just been a little nervous because we don't want to.
No, I understand that. I mean, this is something that you might want to try. You can always back down a little bit if it doesn't work. What about the individual crops you sell at wholesale and at the market? Do you have good data on the sales of those crops?
The price that we get for each of them?
Mm-hmm.
Well, certainly for the small amount of wholesaling to restaurants, because we've got invoicing,
sure.
And so
That's
we've got
right.
that information.
Right.
At market, I don't have good records. Through the season, what I'm selling on a week-to-week basis changes, and the price can change based on the time of the year. So I guess if I had to, I could come up with an average price maybe, but
Well, I think that's an area that you might want to devote some record keeping to. There's some systems that you can use, but the biggest thing is just to make a record of it at market. And I know that's tough because the market can get pretty hectic, but I think there's ways to do it, and we can talk about that, or you can talk to other growers about how to do that. Once you know some of those prices, then you can compare it to other people selling at market, making sure that you're comparing apples to apples. That is, if you're organic and somebody else isn't organic, that might give you some price advantage.
Sure.
So getting some data next year, I think, is pretty important.
All right.
So we've taken a look at your top line, and
you've got some things that you could work on for next year that might improve the top line. But we also need to talk about the cost of production on your farm. And this is going to be difficult without better records. I think we've talked about that before. But for sure, if you look at the total cost, there are two buckets of cost. One is the cost to grow something. And you pretty much make the decisions about the input costs up front. Yield is very important because you divide the number of things you grow by the cost, and that's, or the cost by the number of things you grow. The more you grow, the lower the cost is going to be. And so you should work on yield. I'm not an agronomist, but you should reach out to those kind of people. In harvest and pack, the cost works differently in harvest and pack. It is truly variable. If you don't harvest and pack, you don't spend money. But in any case, in both growing and in harvest and pack, labor is a very high component.
Oh, sure is. I get scared when I look at the payroll numbers on the
Right.
profit and loss statement.
And of the two, harvest and pack tends to be a little higher on most farms. And so looking forward, if you could start keeping data, at least on the labor used to harvest and pack, you begin to get a feel for where you may be able to be more efficient. And that is the way to lower the cost, is to try to be more efficient, add better tools, better procedures in the packing shed, and so forth.
I see.
So with the data we have, we can't really dig any deeper into the cost of production until you get some more data. If you can get more data, one of the reasons to do it is not just to celebrate having data, but to use it in some programs that'll give you a better idea of what each individual crop costs for you to produce. Then you can make better informed pricing decisions. Sure. There is a product that called Veggie Compass that is on the web. You can get it at veggiecompass.com or through the Southern SOG webpage, which links to the Veggie Compass.
Okay.
And if you have labor data, you can start using that product to kind of zero in on individual crop costs.
So does it cost anything?
It's free. It's free for use. You can download it as it's an Excel spreadsheet that you can download off the internet.
So it's a spreadsheet that I start plugging the
Sales,
numbers
a lot of the stuff that we've already talked about. Sales data by crop, and some of the labor data that you start accumulating going forward here. Veggie Compass takes all of the expenses that we've just looked at on your farm and uses a procedure very similar to what we've just used, dividing out all those expenses into the various categories, and then rolls it back up into a much more detailed view of what we've just done.
Well, that sounds great.
And so what we've been talking about on Veggie Compass is a logical flow from beginning to focus the farmer on numbers in a different way. And the Veggie Compass can be accessed very easily off the Southern SOG webpage, down there where it says Veggie Compass. That will link you to a sheet that resides in a site all of its own called veggiecompass.com with an explanation sheet of the tools. What I was trying to stumble around and say in front of Anthony is that there's an input portion of that sheet and an output portion. The input portion has farm expenses, farm sales for all the crops in the various channels, growing area used for each crop, expenses that are specific to a crop, the number of plants of the crop and in total that go through the greenhouse, total labor hours in the greenhouse, labor hours by crop, both in field growing, harvesting, and packing, and non-crop specific hours that are spent doing miscellaneous things around the farm. The outputs are, and this is the golden drop, the cost of a crop up to harvest, the cost of a crop through harvest and pack. And on those things, therefore, the cost to produce each crop in pounds per pound, or dollars per pound, dollars per head, dollars per bushel, is the basis of doing your pricing, and the basis, therefore, of profitability. It also shows total labor cost by crop, gross margin, and net profit, both by crop and by market channel, very quickly. This is input page number 1, which is almost identical to what we just did with Anthony, but in greater detail. Page number 2 is sales data. If you leave the farm not asking for the farmer to do any other thing, it is best for him to keep better sales data. Sales data by channel, and then data generally by crop. And then finally, the third input is production input, which basically is all the labor and specific expenses associated with crops. The output pages show the cost of production, and over here under the column cleverly marked A, B, C, D is the total crop cost to produce, to harvest and pack, which is, as I said, the basis of his costing. Then there's a sales output page, which shows for each crop by channel, here's the CSA channel, the sales of the crop in that channel, and the profit that is made from the sale of that, broken down into pieces that can be managed. Number of units sold, average price, the break-even price that you have to get in order to be successful with that crop. And it's done for all of the channels, and the program allows a person to write in whatever channels they are using on their farm. And then it rolls up into a total. And then finally, the output shows a more elegant version of what we just did with Anthony. And that is, here's your sales, your gross profit, your marketing expense, your overhead, totaled then for general, and net profit. But it does it by channel. And so now a farmer can understand into which channel they are most profitable, where they're getting the bulk of their volume, and how they might want to change that over time. So Veggie Compass gives this sort of information. It gives growers some teaching about which of their crops are truly profitable, and the flip side is which are most markets are most profitable, and which crops within those markets are most profitable. It identifies whether their prices are really covering their costs, or if they need to be adjusted, if they can be adjusted. And then adjusting, and this is a big one, adjusting crop mixes and marketing to take advantage of the profitable crops that have been identified through this process and the profitable markets, and to reduce losses after identifying those crops and markets where you're not profitable. And this is not a pure black and white science, but it is certainly helpful. Okay, so now we're going to finish up with Anthony.
You know, I've thought about trying to track labor on my farm, but it just seems impossible to get, labor data by crop. And then do I also need to track it by the different markets that I'm selling in as well?
That's right. There are some tools that you can use to make this a lot simpler. A couple of them are simply procedural. If you probably get time cards from your employees right now.
Sure, they record how many hours they work.
And so all you'd have to do is ask them to also record what they're working on. So that time card could become a record. Another thing to do would be to have a whiteboard in your packing shed for your own labor and for their labor to, again, record what they've spent time on that day. I think the main thing on this is to make it part of the routine so that every day it's just known at the end of the day you record what you've worked on and what they've worked on.
Okay.
There are some forms on the Veggie Compass website or the Southern SOG website some paper forms that could be used.
Okay.
And we have a link on there to some other record-keeping, basically technologies, using iPads and even smartphones to record data out in the field and then transferring it to some spreadsheet programs.
Oh, that would be great. I'm practically physically attached to my smartphone. So.
There you go. So we've talked about profitability benchmarks, but in this area of production, there are some benchmarks from other farms about how many sales they've made per acre actually under cultivation. There's a study that's about 10 years old that would say that farms your size should be shipping about $15,000 worth of produce per acre. If you take into account inflation and how things have gone in the market, today that could be $20,000. And indeed, there are farms that are shipping about $20,000 per acre. You're at...
Well, if we do the math on mine, I'm at $14,000 an acre, so 14. I'm not there yet.
Well, I go back to the issue of yield and the possibility that you could extend your season. Yeah, I saw some hoop houses when I came in. Certainly that would increase the amount of sales that you have per acre of actual cultivation.
Yeah, we're really optimistic about what that's going to contribute to the bottom line. We've got the one hoop house, and if it goes well, we may build up another two. It also seems to me, you were saying, suggesting I raise my CSA and maybe some of my farmers market prices.
That'll increase the dollars per sale. That's right. At the current yield, even. And then if you increase yield, that would even be greater.
Okay. So we talked about some of these benchmarks. The one that we talked about, the gross sales per acre, actually comes out of a study done by the University of Wisconsin on about 23, 24 vegetable farms up our way. It shows, it was done by size of farm, and it shows two things. It shows the average gross sales per acre, but also the range, and we'll talk about the variability of all of these numbers. In addition, it shows the number of labor hours that were typically used on that farm to produce at the level that is shown as the average, and the return to the owner's labor management and capital on those farms. We talked about variability. What we found, or actually what others, I didn't do it, others found, is that there is considerable variability from farm to farm and from year to year. And it's caused by variance in crops that are grown. It's caused in the pricing and the channel that the farm is selling in relative to others. And demographically, a farm that's sitting 5 miles from the middle of a large populated area, which is pretty rich land, may have the ability to have higher prices than a farm that is at some distance from a major market. So that data is available, and the link to that data it can be found through either of the web pages we talked about, and the specific publication is called
Grower to Grower.
Grower to Grower. Then the Wallace Foundation, in collaboration with the Farm Credit Council and the Farm Credit Council in the East, did a bunch of benchmark studies in the Northeast, I believe. A somewhat smaller sample, but nevertheless enough to get this sort of data. I won't go through each of them, but you'll see some of a similar array of benchmarking that can be discussed with the farmer that show productivity. So I think what we do next is finish up totally with Anthony, and then we'll come back online and see where we stand.
Well, one of the things that it shows me, though, that if the most I could make is 20,000 per acre, at the scale I'm at right now, that only means $100,000 gross, and with, maybe I can get a little bit more efficient and decrease my cost of production, but it doesn't seem like it's going to be possible at this scale maybe it'll be possible for me to quit my winter job, but Rebecca would really like to be full-time on the farm, and it doesn't seem possible at this scale for her to work off the farm or not have to work off the farm. I feel like we probably have to double in size.
One thing I'd like you to consider is if you go back to the profitability benchmarks, if you could get your profitability, that is especially the gross profit percentage, up to what other farms are doing, or even greater if you had the hoop house hooped up, you could have, through profitability only, not by grazing more, but just being more profitable, you might be able to get your goal. And I think you should concentrate on that first, then think about expansion to more volume.
Okay.
I think there's a lot that can be gained by that approach.
Well, Tom, I feel like this is giving me a lot to think about, and perhaps a path forward.
Well, good. You have to realize that, and I'm sure you do realize that you have a very complex business. You're raising 50 different crops. You're selling into 3 different market channels. To manage it, you have to get your arms wrapped around some of the details of that. And with some modicum of data collection and using some of the tools we've talked about, that's the purpose of trying to get some information that then you can start making better management decisions about. And I do believe that working on your profitability here in the coming season is probably the place to start. And on record keeping, better sales records, and start figuring out what of your labor you'd like to start keeping track of. And next year, I think we'll sit down and you're going to have better results.
Well, I sure hope so. So I think what I'm going to do is I'm pretty excited to check out Veggie Compass. So I'm going to download that and see what it's about. And if I have questions, can I give you a call?
Give me a call. Be happy to help.
Okay, thank you all very much. We do have some time for a few questions, and feel free, if you would like to put your questions in the question box down at the bottom of your control panel there. We'll start with a couple we already have. And I hope most of you all were able to at least see and hear most of the video throughout it. I had some in and outs myself, but got most of it. So first question, and hopefully, Jim, you're out there available to answer. Are there any particular accounting software that you find better than others? Is QuickBook best? Could you use Quicken, or is there, just wonder if there's any particular accounting software you recommend.
Well, the main thing is to set it up, any accounting software, set it up correctly. And by that I mean if you set your accounts and sub-accounts up so that it automatically takes every expense and puts it in one of these buckets. And the ultimate, as far as I'm concerned, would be that very first input page of Veggie Compass shows all the buckets that would have to be populated. If your accountant or you can set up the accounts that way, the accounting package really doesn't make too much difference. Whatever is compatible with what you've used in the past. Certainly, QuickBooks is one that I see as I go out to farms. I see it all the time. And usually what I have to do is help people reestablish some of their accounts. But to answer the base question, any good accounting software will do for this.
Okay. Here's one about Veggie Compass specifically. Can Veggie Compass create projections by week to identify a break-even point, for example?
As Veggie Compass stands, it is a backward-looking tool that looks at what happened last year. Now, with a little trickery, you can project forward one whole year, and if you knew when certain crops would end up in your CSA box or being offered at market, not within Veggie Compass, but with the knowledge from last year's numbers and a guesstimate of what your yield is going to be going forward, and even a good guesstimate of what expenses, you could sort of estimate how much money you're going to make for each crop going forward. But the basic tool would have to be tricked. It is a backward-looking tool, only looking forward if you start playing with the numbers. And, you know, we can't do it here, but I could teach somebody how to do that. That's pretty easy.
Okay. We had a question about re-showing the percent benchmarks. I think those will be available when this comes back out on in a Vimeo. We can't show it right now, but that will be available again. Other question is, do you have recommendations or record-keeping templates for tracking sales volume at market? We used to weigh product before and after each market, but that is very laborious. Is there any other way?
That's the fundamental gold standard way. You know, how many heads go out? How many heads of cabbage go out? What price did you get for them? How many came back? That's your sales. Now, there are some forms that have been made by ATRA, and you know, I forget the web address of ATRA, but ATRA is the, you know, ATRA, that facilitate it. But basically, you're stuck doing that. And frankly, that's easier. Well, there are some other things that you can do with these. And John Hendrickson is here with me in Wisconsin, and he'll know the name. There are ways to record this stuff at point of sale with a card swipe on an iPhone, isn't there?
Yeah, if you're set up with that kind of technology, but I don't know as that many growers are yet. I mean, that's maybe a wave of the future. Most growers I know use the system that was described by a person that asked the question. You document what you take to market, and you document what you brought home, and what, you know, the difference is that is what's sold.
Yeah.
Okay. Couple quick ones, and we're going to have to cut it off here. The one is the video that we could not see. Will it be available something like on YouTube? And yes, it will be. And the timing is not quite set up yet, but that we'll definitely let you know about that and when it's available. The other question, is there a webinar on setting up QuickBooks to help fill out Schedule F?
We don't have one. I don't know of one. We don't have one scheduled.
Right.
But it's a good idea to put in our repertoire, Steve.
Exactly. Okay. Let's see. Okay. Was there something else?
Steve, I just wanted to jump in and apologize to people who weren't able to see the video. We actually had numerous practice sessions to ensure that the technology was going to work, and we were 99% confident going into today that it was going to work, and so we apologize for those people that weren't able to see it.
Right, and same here. But it will be available at a theater near you, or at the video screen near you soon. All righty. Thank you very much for joining us for today's webinar. After the webinar, you will be given the opportunity to take a short 3-question survey. That should only take about a minute. We'd appreciate it if you complete that survey for us. You may recognize some of the questions. If you found the series of webinars helpful, we hope that you'll be able to join us in Lexington, Kentucky on January 26th for the full-day Growing Farm Profits in-service training that will be led by Jim Munch, who is here with us today, and Ellen Polishek, who has been with some of our other webinars. And remember, right after the in-service training, you can spend a few more days in Lexington for the 25th Anniversary Southern SOG Conference. We hope all of you have a great holiday season, and thank you for being here today. This concludes the webinar.
Tutorial.